Hello, welcome back to Core Finance. I'm Matt Brown. I'm joined by Ronnie Chopra, Chief Market Strategist at FIXI Markets, and we're going to look at Aviva. Been in the news this week. Share buyback scheme.
Yep.
£1 billion. Shareholders liked it. The market will like it. Is that actually a positive thing for a company to be doing share buybacks? Would shareholders prefer them to be investing in the business?
Insurance companies have a lot of cash. They generate a lot of cash. Mm-hmm. And instead of overpaying for an acquisition, sometimes it's more prudent to acquire one's own shares. And in this case, Aviva, even though it's had a fairly decent run over the last 12 months or so, they've lagged behind the likes of Prudential over the last 10, 12 years. So I see a lot of value in Aviva at the moment. Dividend yield of 5%, high single-digit price-earnings ratio. I think the management is very good, Mark Wilson, and he's kind of transformed the company from a few years ago when he became CEO, when the shares were trading around the £3 mark. I remember because I was on CNBC back in the day, around 2014, and they came out with really good results, and on the day of results, it went up about 10%. But the shares have come down a long way. I mean, going back to 2007, these were trading around the £7, £8 mark, yeah, just above £8, and they were in merger discussions with Prudential. I'm sure you remember as well.
Yes.
And at that time, both share prices were fairly evenly matched around the £8 mark. And today, Prudential's over £18 because of its bias in Asia.
Well, that's what it all comes down to.
That's right.
For Pru is Asia.
And unfortunately, Aviva has been stuck here and in Europe and in the lower growth areas, but it's done a good job over the last couple of years. You know, going up from £3 to £5 is very good. On top of that, you're getting a 5-6% dividend yield, and with the base rate at 0.5%, it's attractive. Maybe there will be further M&A activity in the insurance industry. I mean, Aviva did pick up Friends Provident, didn't they, about a year or so ago? Maybe 2 years ago.
Yeah. I mean, it might be a company that some of the German insurance or reinsurance.
There was talk years ago of the Germans and the Italians. Was it? Forget which company it was in Italy. But Generali.
Generali.
Yeah. So yeah, I mean, like going further back, look at 2001. These were over £10, £11 a share. So today, 15, 16 years on, we're half at that level, and the FTSE's obviously higher now than it was then. So yeah, they have lagged behind. They've had a bit of strength recently, but still, I think they offer great value. 5-6% dividend yield in this market. Well, one to tuck away.
Yeah, exactly. I was going to say exactly. That's tuck it away in your portfolio. Maybe on a sunny day, they may be a bid target.
That's very true.
Fantastic. Ronnie, thank you very much for joining us.